I'm Caroline Hyde. This is Bloomberg Technology. Coming up, the tech earnings parade marches on, with Alibaba leading the charge, how the bets on content in the cloud are paying off for China's e-commerce giant. Plus, new market highs. Both the S&P 500 and Nasdaq hit record levels as corporate earnings roll in. We'll break down which stocks are leading the gains. And the Verizon-Yahoo deal is still in play, but now going into overtime. We'll look into potential impacts on the acquisition after Verizon's worst performance report since 2011. First to our lead. Alibaba shares popping after China's biggest e-commerce company reported better than expected quarterly results. Also encouraging investors, the company lifted its yearly sales forecast as spending in the world's second biggest economy stays strong. Alibaba's new ventures, like its cloud computing arm and its Netflix-like division Youku, are bolstering the giant retailer. Now, joining us from New York, Tin Culpen. He writes about Asia technology for Bloomberg Gadfly. That's Bloomberg's fast commentary section. And Bloomberg technology reporter Selena Wang. Selena, first to you. Sales beat, profit beats, forecasts upgraded. Dig into the nitty-gritty for us.
I know, it's almost too good to be true. Another quarter, they beat on the top line, they beat on the bottom line, they even raised sales forecast. Something that was interesting, though, is that the core business, the annual active buyers, that number actually didn't grow very much. It grew less than 10%. So a lot of the growth, a lot of the reasons why investors are pushing up the stock today, it's because of the growth and its more fledgling businesses. We saw triple-digit growth in its cloud computing division. We also saw triple-digit growth in its media digital entertainment business. So a lot of talk about how that's the next new growth strategy for Alibaba and how they're going to integrate all of these businesses together.
I mean, just digging into some of the Bloomberg functions, if you go into analyst recommendations, you go into Alibaba, get into ANR on the Bloomberg, you will see phenomenal 90% of analysts, that's 42 out of the 47, say buy this stock. Not one single one says sell, 10% say hold. We saw in Deutsche Bank, Cantor, all upgrade their price targets today. And you'll see, though, that still the price target is way off where the price, much higher than where the share price is currently trading. Tim, elaborate on these new big bets that potentially is helping some of these buy recommendations. We heard there from Selena about the entertainment. Where's the juice here?
Well, look, really what it comes down to is this. They've got cloud, and what's interesting is their cloud business, it is a fledgling business, it's growing. But what's interesting is if you dig through the numbers, the cloud business ARPU is actually rising and staying stable. Normally we see these businesses, when they grow, you get less revenue per user because some of the lower tier users come in and start using it. But in fact, it's staying stable, and that's a really good sign for Alibaba. Now, it's still losing money, to be sure, so that's, of course, not a good sign. But the fact that they're able to keep that stable is very, very important for them. And then, of course, on the entertainment side as well, and again, it's losing money, but it's growing. And these are two areas that show that Alibaba is looking into and can actually find some success out of their main business, which is simply selling products online. So these two new areas, really, they are drag on earnings right now, but the fact that they're growing shows that Alibaba has a few more tricks up its sleeve.
And Selena, what it really feels like is that Alibaba is morphing into an Amazon here, taking a few leaves out of their book. What did the executives say about these new businesses?
I think something that people are expecting more details on was this deal with In Time. It's several $1 billion for Alibaba. They want to buy out this physical brick and mortar department store. And this is part of Jack Ma's vision to transform offline retail and integrate it with some of these e-commerce initiatives. So I think some analysts are still pretty skeptical of, is it really worth it to spend that much on physical retail? But Alibaba now is all about e-commerce. Is so yesterday. We're now about integrating digital media, using content to draw users, leveraging our data to get people to spend more time on our platforms, and to transform physical retail so that people in brick and mortar stores can use our technology to shop better, which, as you mentioned, is not too different from what Amazon's doing. They recently opened grocery stores that use very advanced technology, and they also have some physical bookstores.
Tim, I think we heard just Selena there talking about maybe there is still a little bit of caution out there. Interesting, you look at the short interest on this particular stock, and it's actually relatively high despite all the buys and the holds that we have. Something Selena that pointed out earlier. what are the risk factors that might be driving this short interest?
Well, look, one of the key ones, which Selena just pointed out, is the fact that their user growth is slowing. They're now in single-digit user growth. That's a problem for them, of course, but they are managing to grow the amount of sales per user. But really, the other thing is that they've got a lot of other businesses. They're, of course, invested in Ant Financial and so many other different kinds of businesses, and they're a little bit of a black box. So a lot of the shorts are really betting on the fact that there is problems here. But so far, the shorts who've been trying to have a go at shorting the stock over the last few years haven't really paid out. So there's been a lot of people probably losing money, I'd be guessing, on trying to short the stock. Again, we're seeing this again. A lot of people betting that perhaps there is something to come out of this that will be on the downside. But so far, they really haven't been able to make much money from those short bets.
They certainly haven't thus far. And Selena, what about, we broke the news with you earlier about the Olympic bet that is being made by Alibaba as well. Any more flesh to the bones of the direction that Alibaba is going in terms of globalization?
I think executives really were reiterating that this is something that's really going to get our global brand out there. As they try to get about half of the revenue from abroad, it's really important that they can elevate their brand. Tim was just talking about some risk factors earlier. Let's also not forget that they were just put back on the USTR's list, Notorious Markets list, for being a haven for knockoffs. So because by sponsoring the Olympics, they're now going to have their name associated with the Olympic Games around the world, and hopefully this can bolster their reputation and help more businesses to sign onto their platforms.
As ever, brilliant analysis. Selena Wang, Bloomberg technology reporter, thank you. And Tim Kilpin of Bloomberg Gadfly, you're going to be sticking with me because on the tech earning front, Samsung's profit more than doubled in the last 3 months of 2016 on robust semiconductor sales. It was also driven by a recovery in its mobile business after the fire-prone Galaxy Note 7 debacle. Now, the company will also buy back $8 billion worth of its own shares, which will be cancelled. And Tim, we saw the shares pop on the back of this, largely due to the buyback. And is this just to try and placate the investor base that has been through a crisis or two?
Yeah, look, I think it is. It was a very large buyback, but it was only around about 10 to 12% of the cash they've got on hand. So it was a large number, but really they've got a lot more cash that they could be giving back to shareholders, either through buybacks or through actual dividends. So really, I agree that the pop is based on that. If you look at the actual earnings themselves, year on year, the top line basically didn't change. It came in at almost exactly the same number, but going through the line, we saw gross margin improve quite a lot. And that's simply because their semiconductor side and their LCD side did very, very well during the period. And those are very capital intensive and depreciation heavy kind of businesses. So when sales go up there, you got better gross margins. But I got to say that if that can go forward into the next few quarters, that's great. But I'd be skeptical that they could, because these are very cyclical businesses, supply demand driven, and we need to see something going through in the next few quarters that will drive demand for NAND, flash memory, DRAM memory, even LCDs. And there's really not a lot out there in the market in terms of new products that looks like it could drive these areas. So that would be a real threat for Samsung going in the next few quarters.
So a bit of a stay of execution if you're looking at the share price, but what about what's been unfolding to do with the embroilment of Samsung's leader, well, heir apparent in the scandal that has consumed the South Korean politicians? Is there any update in that respect, or how investors are digesting this? Well,
you know what's amazing is that investors don't seem to be that worried about it, to be honest. They kind of almost dismissed it and brushed it off. J.Y. Lee has not been arrested. He's not been put in prison or anything like that at this stage. They're still investigating. But so far, it looks like the worst part could be over. There's still a lot of other kind of problems that could be ahead, and so there's a few landmines down the track for Samsung, for its executives and so forth. But really, to date, if you look at the share trading of the stock over the last few weeks, most of the bad news, it seems to be priced in. And in fact, some investors seem to be kind of betting that this could be a weakness. Price-earnings ratios seem to be rising quite high, so a lot of people do believe that, don't worry about it, Samsung will be fine. And then you look, of course, at the Galaxy Note 7 problem. We found out overnight really what was behind it, with a battery problem there. Again, I think the reputational risk mostly is behind them, and they will go back to work to rebuilding the brand that Samsung has.
And digging into that particular company and analyst recommendations, also 39 buys, just one sell. Seems to be a theme with these particular companies. Till Culpen of Bloomberg Gavfly, thank you very much for all your insights today. Now, staying on the earnings beat, SAP raised its targets for 2020, citing a surge in customers purchasing the latest suite of applications at a faster pace. The updated outlook came out with the company's fourth quarter sales, which were in line with estimates. SAP is transitioning from software installed on customers' computers to online cloud computing tools. Now, CEO Bill McDermott spoke with Bloomberg TV earlier about the company's strength in the US marketplace.
Clearly, any enterprise company operating in the global economy is almost always running SAP. So we like to think that our purpose in the United States will only get stronger because we can help the new president take cost out of the equation where it should and focus on growth where it can. And that's why you need global players like SAP to be great partners, and we will be.
Still to come, President Trump's trade agenda. We'll head to Washington to hear from the Republican senator who's hoping to curb the powers of the Oval Office when it comes to tariffs. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV. That's weekdays, 5 p.m. in New York, 2 p.m. right here in San Francisco. This is Bloomberg. Now for a look at the markets. US stocks rose the most in 3 weeks in Tuesday trading. The S&P hit an all-time high as investors bet that growth in the world's largest economy is set to accelerate. As ever, Bloomberg's editor-at-large, Corey Johnson, here to pour through the numbers. Percentage point increase on the IT stocks. You're looking at S&P 500. It was a pretty strong day.
Yeah, in terms of today's trading, I mean, I think what you see is sort of all caution being thrown to the wind and a move towards risk. We saw it in the S&P 500, and we saw it, interestingly, in the NASDAQ. If I look at my Bloomberg IMAP function, which sort of shows us the different sectors of the market, these are the sectors of the NASDAQ, which, of course, can be, we always call the tech-heavy, but in fact, there's a lot of different kind of industries, utilities, materials, energy, and so on. The only thing that didn't go up was the stuff on the red here, healthcare, which is a sizable portion of the index.
And tends to be somewhere you go when you're more risk.
Perhaps. Now, in those stocks that are in the NASDAQ might be those that aren't sort of the dividend-heavy paying ones, but companies more like in biotech and so on. But certainly this strong move into these technology stocks today shows that investors look at this world and don't see a lot of risk.
Are we seeing any particular flavors that are outperforming? Is this based on Trump at the moment in particular? We're seeing hints at the way in which policy might be navigated. Is it still the catch-up play?
Yeah, I think it's really a suggestion that tax policy is going to favor these companies, that repatriation of cash could help these companies, and that Congress might not stand in the way of some of those things. But we'll see as the policy starts to get administered. What we've seen, from the Trump administration thus far is still there's a lot of talk of a lot of things, but they've got a lot to prove a lot. The market's believing everything is going to happen and be rosy. We'll see if that actually plays out. Surely it won't be that simple.
Now, one of my other favorite geek functions is EA. If you're looking into earnings analysis on the Bloomberg, you can see that actually, if you're looking on the S&P 500 thus far, what is it? 100%, 9 out of 9 of the big tech players that have so far had earnings have beaten.
Yeah, actually, I haven't even looked at the NASDAQ yet, but the NASDAQ, as you see, we haven't had a lot of companies report. In the NASDAQ composite, we've got 2,400 stocks, if you call it. We've only had 2 companies report thus far. But in the S&P 500, that's a little bit different. It's as simple as just changing that SPX. When we go to the S&P 500, it'll take a second to pull those numbers together. But when you look at all the companies that report, and it's really, to me, this is an analyst report card, right? This isn't showing you how well companies are doing. It's just showing you how poorly the analysts are analyzing. And the analysts have clearly expected, and when it comes to earnings, which is more easily manipulated than sales, the analysts have gotten it wrong. So the analysts have really screwed up. Too pessimistic. The company is actually reporting some positive numbers here. But when it comes to sales, we've seen these companies kind of really kind of averaging in with what the NASDAQ. But when we see telecommunications services and IT, we've only had 17 companies report out of the 71 companies, but beating on sales a little bit and also doing better on earnings per share. But again, that really tells us about it tells us about the analysts. It doesn't tell us much about the companies and how they've performed.
I'm sure you'll keep a critical beady eye on the analysts as ever.
You know what, beady? Yes, beady eyes.
Beady eye, we like that.
I'm on it.
Great to have you on, as ever, Bloomberg editor-at-large Corey Johnson, running through the numbers. Still to come, though, President Trump's trade agenda. We'll head to Washington to hear from the Republican senator who's hoping to curb the powers of the Oval Office when it comes to tariffs. This is Bloomberg.
give.
Now, in his first days as president, Donald Trump has taken swift action on U.S. trade policies, withdrawing from the Trans-Pacific Partnership and vowing to renegotiate a decades-old trade deal between the U.S., Mexico and Canada. Now, Trump has also vowed to hit companies that manufacture goods outside the U.S. and try to sell within the states with a tariff. Bloomberg's Kevin Cirilli is standing by in Washington with more analysis.
Senator Mike Lee, thank you for joining us today. You introduced a bill recently that would give Congress control over, or authority over approving any executive action taken by the president, in this case President Trump, over whether or not to increase tariffs or to approve withdrawing from a trade agreement. Why did you think it was necessary to do this?
This is part of a decades-old problem that's been created by Republicans and Democrats alike, in which Congress has handed over its authority to the executive branch, sometimes to executive branch bureaucrats, and we see that with our $2 trillion in regulatory compliance costs each year, and sometimes in other more discrete areas like foreign relations or here trade.
Right, but your critics are saying that you're taking away power. You're trying to take away power from President Trump. Is that what you're trying to do?
What I'm looking at is the Constitution, which gives power to Congress to make laws, and specifically to make laws, among other things, about things like tariffs. So we have things like there are provisions in the Tariff Act of 1930. There are provisions in the Trade Act of 1974 that give immense discretion to the executive branch to decide just unilaterally to make certain decisions, to raise tariffs. And that is a policy decision tantamount to making law. This is not the executive branch's fault. It's not the president's fault. This is Congress's fault, and Congress needs to reclaim its own power.
Just quickly, and then I want to get to the Supreme Court. Do you agree with President Trump's actions on trade policy?
Well, those policies are still unfolding. It's not entirely clear what actions he wants to take in this area. But my concern is a deeper one. It's a broader one. It's one that has been brewing since long before we knew who the president would be. This is a question about the people's elected representatives in Washington, in the House and in the Senate, being able to make law, which is what we're here to do.
Supreme Court, we're hearing that President Trump will announce next week who he will choose to appoint to the Supreme Court. You were on that short list that he put forth during the campaign. Are you interested in becoming a Supreme Court nominee? And have you had any discussions with the White House since Election Day about it?
Oh, of course I am. I'm a lifelong Supreme Court watcher. I've been watching Supreme Court arguments since I was 10 years old. Honored to be considered and on the list. But regardless of what choice President Trump makes on this, it's going to be a good one. The people on that list are good, and we're going to get that person confirmed. I look forward to pushing through that person once he or she's been nominated.
Have you had conversations since Election Day
of course I have.
with the White House?
Along with many other issues.
Specifically about you being appointed to the Supreme Court?
We've talked about the issue broadly.
All right. I think Caroline, my colleague, has a question.
Yes, Senator Lee, thank you very much for joining us. Caroline Hyde in San Francisco. I'm going to take it back to technology, if I will, because you were just talking there about trade policies, and it seems as though at the moment Donald Trump is very much trying to fight cheap labor abroad with trade tariffs and the like, but is not actually the real threat to jobs automation, and is that a government responsibility to help retrain, or are companies?
No, I don't think that's a government responsibility. We have to look at technology in much the same way we look at other types of competition. What our job is, from the standpoint of government, is to make sure that government isn't putting undue burdens on companies. They face enough pressures from other areas. We can at least make sure that we are no longer the country with the highest corporate tax rate in the developed world. We can at least make sure that we're no longer putting $2 trillion in regulatory compliance costs on Americans every single year. And all those costs, keep in mind, get passed down to America's poor middle class, who pay for those costs through higher prices, diminished wages, unemployment, and underemployment. That's why there's a lot we can do to increase the competition of American manufacturers, of American employers, and to give more opportunities to American workers by focusing on those issues, by reducing those barriers that government itself has put in place.
And I wanted to get into one of your other key roles, of course, because you're on the subcommittee when it comes to antitrust competition policy. There's a fascinating argument brewing between two key tech heavyweights, Apple and Qualcomm. Is there a particular view you take on what Apple is doing in terms of suing Qualcomm in terms of its licensing processes?
No, look, I'm not getting into that right now. That will play itself out, and I don't have any interest in commenting on that.
Senator, last question for you. If they offer you the Supreme Court job, would you accept it?
Of course I would.
And have you had conversations today with the administration since this meeting, this week, about that? How serious are we?
Not today. I have not had any such conversations today or yesterday.
All right, Senator Mike Lee, we appreciate your time.
Thank you.
That was Bloomberg's Kevin Cirilli live with Senator Mike Lee for you. Now, both Yahoo and Verizon, meanwhile, reported earnings this week and gave a new timeline of its highly anticipated deal. We'll discuss who benefits from pushing the sale back. We'll see Yahoo currently been delaying that sale to Verizon. Yahoo shares currently trading a little bit higher. This is Bloomberg.
How do you walk that line when you're in the middle of a crisis situation?
It's really all about enabling people. Technology needs to serve everyone.
But at the end of the day, it's all about emotional decision.
I think there's huge innovation left in music.
The hallmark of a truly great leader is that great is never great enough.
500 million users is a big feat. It's got a life of its own. Don't get in its way and make it awesome.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump wants a meeting with Canada and Mexico within 30 days to discuss NAFTA. His plan to renegotiate the North American Free Trade Agreement was received in Mexico with a call to protect tariff-free trading, while Canadian officials are concerned about avoiding unintentional damage to its economy as the U.S. targets Mexico. Meantime, Prime Minister Justin Trudeau says Canada will continue to pursue trade agreements worldwide to make sure workers benefit from higher wages driven by export-intensive industries. Cabinet ministers with the PM at a retreat welcomed President Trump's decision to greenlight the Keystone Pipeline. Israel says it has approved 2,500 West Bank settlement homes. The defense minister says the majority of the housing units will be built in blocks, where most settlers live and which Israel wants to keep under its control under any future peace deal. French President Francois Hollande met with leaders of Colombia's largest rebel movement today in an area where guerrillas will soon begin turning over weapons as part of a historic peace deal. Hollande, accompanied by President Juan Manuel Santos, visited a rural camp in southern Colombia run by the UN. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in New York, 9:30 Wednesday morning in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Elisa. Well, New Zealand's off to a bright start this Wednesday morning. The NZX already up 1/3% after the first 90 minutes of trade, and things are looking good on the Nikkei. Futures pointing up, and we're expecting gains of 0.6% on the ASX when we have the open here in a little under 30 minutes. Everybody will be watching the world's biggest miner, BHP Billiton, when we do get underway. Just out with second quarter production numbers. Iron ore looked pretty good, 60 million tonnes for the second quarter, a slight beat. Copper, the big disappointment, 357,000 tonnes. That's down 7% on year. Full year guidance has also been lowered. That's mainly due to a severe power outage at its Olympic Dam mine in South Australia late last year. Big piece of data out today locally. Australian CPI for the fourth quarter estimated to come in weak again at 0.7%. So that's some important information for the Reserve Bank of Australia ahead of its first meeting of 2017 in about 2 weeks' time. Also getting preliminary preliminary GDP out of South Korea. That's also expected to confirm a slowing economy there. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Now back to earnings. A slew of big companies reporting this week, including Verizon. Shares of the largest US wireless carrier saw their worst performance since 2011 in Tuesday trading. That's after adding fewer monthly wireless customers than expected. The company remains under pressure to transform itself into more than just a phone company. Meantime, Yahoo is delaying the sale of its main web operations to Verizon until the next quarter. The reason? Well, it needs more time to meet closing conditions from the disclosure of two massive data breaches. Now, as the two parties attempt to put the final touches on the sale, here's a look back at what's been said on Bloomberg Television about the deal and Yahoo's most recent hacking disclosure.
The Yahoo brand is an excellent brand. The Yahoo team is an excellent team, and it really fits into the larger strategy that Verizon has.
Obviously, this transaction isn't just about the strategic future for Yahoo, but it's also about unlocking value for our shareholders in the remaining equity stakes, et cetera. And so this is really an opportunity to kill two birds with one stone, so to speak.
It's a great transaction for the company, great transaction for the shareholders, and I think Verizon's a great home for the asset.
Well, this is a pretty major hack. Hurts the brand, but the eyeballs that Yahoo still provides to them with some of their kind of key websites, fantasy football, Yahoo News, things like that, are still of value to a company that's looking for scale, is trying to leverage their mobile business. Yahoo is more of a desktop application. They want to get people on the mobile side, use some of these ad tech.
From a business strategy standpoint, especially when you look towards the next 5 to 10 years, you know, the assets coming together represent a very unique opportunity, a very unique scale.
I think based on where Yahoo was in the last year, it was an inevitable outcome that it was to be sold.
We're here to discuss Verizon's results and its future with or without Yahoo is Amy Yong, an analyst with Macquarie who covers telecoms in New York. Also from Los Angeles, Bloomberg's deals reporter Alex Sherman, who's been reporting on this deal since day one. Amy, to you, I read your note on Verizon's numbers and you call the numbers squishy and uninspiring. Elaborate for us.
Yeah, I think the 2017 outlook certainly was a little disappointing for investors. I think people were looking for GDP plus growth, both on the top line and earnings, and certainly that wasn't what the message was this afternoon, or this morning rather. And it certainly puts probably a lot more pressure for them to either get Yahoo, AOL in the right direction, or perhaps even look for additional growth opportunities and leverage M&A.
Alex, talking about that opportunity then, what do we know in terms of the Yahoo-Verizon deal? Because there was talk in December that maybe the price would be reduced, maybe that the deal would be put to bed entirely.
Right, so we know at this point that the deal is going to be delayed. So it was supposed to close at the end of the first quarter. Now it's going to be bumped into the second quarter. Verizon is still trying to figure out what exactly the cost of two enormous hacks plus the potential liability down the road of any future Yahoo hack might be. And I think that sort of calculation will drive Verizon's thinking on how hard they want to push a potential reduction in price. As in any negotiation, it comes down to leverage. Who needs who more? Yahoo would be left pretty desperate, I think, if this Verizon deal didn't go through. Amy just mentioned that to some degree, Verizon probably needs Yahoo also, but it's more of a drop in the bucket for Verizon. So on a leverage game, you'd probably have to think advantage Verizon if they are, in fact, able to push forward on a reduction of price. Whether or not they are, I think, still to be determined. I do think that almost everyone around the deal has told me that they still expect the deal actually will go forward, though. So I wouldn't expect the deal to fall apart. That would be a surprise.
Amy, you currently have Verizon stock at neutral. You think the share price could go to 55. It's currently at about 50. How much of that is baking in the Yahoo deal? Would that have to be unwound if we saw it collapse?
Certainly, two acquisitions are not in numbers right now, and that's one that's XO, and the other one is Yahoo. I think there's a lot of pressure for them to actually get the wireless business in the right direction. Some of the things that they talked about is that on a sequential basis, certainly looks like growth is going to be much better as we head closer to 18.
Amy, talking about that wireless business getting on track, let's talk about M&A more broadly here, because with Trump now in position, it seems as though M&A might potentially go through a little bit easier when it comes to the likes of maybe Sprint buying T-Mobile. That's something that's been talked about in the market for a while. Would that be a boom or a bust for something like Verizon?
You know, ironically, it's probably a boom for Verizon. I think that if T-Mobile and Sprint were to merge, you would have a four-player market go to three, in which case pricing discipline could actually be reintroduced into the marketplace. And certainly Verizon would be a big winner in that scenario. But you know, their biggest competitor, AT&T, is about to close on Time Warner Entertainment, and so certainly I think they have to address some of the growth issues that they have.
I mean, the push here, Alex, has been content is king. We can't just provide you with your mobile. We've got to offer our customers a reason to be addicted to that mobile. And it has been via content with Time Warner pairing up with AT&T and Yahoo wanting to get into bed potentially with Verizon. But when you're talking to your sources, when you're talking to the M&A guys and girls out there, are they anticipating more consolidation within the telecom space?
Verizon and AT&T really operate as a case study in M&A for companies that fundamentally do the same thing, if you rewind the clock a couple of years ago, that have gone in very different directions. AT&T first acquired DirecTV, a big deal. Then on top of that, you add in Time Warner. It's $100 billion plus in M&A in 2 deals. Verizon, in the meantime, has bought AOL and Yahoo. You add up those 2 companies, that's about $10 billion. So these 2 companies that really had done the same thing year after year after year, provide wireless service, have gone in very different directions. So the question now is, does Verizon take a look at AT&T and say, you know what? They actually were ahead of us in this. We need to make a counter move, whether that's something enormous like trying to buy a cable company, or maybe smaller and just trying to buy some more content. Or does Verizon say, you know what, we don't agree with what AT&T is doing. We're very content to just sort of build our mobile advertising platform out, maybe dabble in content a little bit. But you know, we want to make sure that our focus is our wireless network, spectrum, and trying to figure out a way to generate growth, as Amy referred to, because that's really what Verizon has struggled with. And as she mentioned, in large part, it's because T-Mobile has been an upstart in this and has undercut them on price. So that's put Verizon in a tough spot. If Sprint and T-Mobile were to come together, maybe that advantage wouldn't be so distinct.
And Amy, you cover, fortuitously for us, AT&T as well, and their numbers coming out tomorrow. What should we be looking out for?
Well, you know, they pre-announced last week, so certainly I think there's going to be more color on them on what they say on DirecTV Now, their streaming product, and how successful that could eventually be this year and next year. And certainly I think investors are going to be really focused on what they say on their wireless strategy, and obviously Time Warner.
I'll be looking out for your note on AT&T tomorrow as well then. Amy Yong, analyst at Macquarie, thank you very much indeed. Alex Sherman with Bloomberg News, great analysis as ever. Now, a company we're watching, the artificial intelligence firm Affinity, is said to be considering an IPO that would value the company at $2 billion or more. That's according to people familiar with the matter, who said Affinity could go public as soon as this year. Affinity has potential to have one of the largest enterprise software IPOs in recent years. Coming up, President Trump is making good on his pledge to take down his predecessor's prized initiatives. But there is one Obama effort impacting tech that may be embraced by the new administration. More on that story next. This is Bloomberg. Microsoft just scored a major win. On Tuesday, a federal appeals court upheld a ruling that the US cannot force the tech giant to turn over customer data stored outside the US. Now, you'll remember last July, a 3-judge panel of the court overturned a 2014 decision ordering Microsoft to hand over messages of a suspected drug trafficker. Still, the company's battle with the US may not be over, as the case could be picked up by the Supreme Court. And tech has been bracing for a Trump presidency, and with many in Silicon Valley awaiting the possible rollback of their price policies for the sector, like net neutrality and the H-1B program, well, one important effort for the industry that may be safe is Obama's tech surge. Now, that's the organized insertion of technologists and digital tools into the highest branches of federal government. joining us now, Bloomberg's head of global technology coverage, Brad Stone, has a great piece out on this. And so he installed CTOs, CDOs, and they're being embraced by the new administration.
We'll see. There are some early signals, but look, this was one of the legacies of the Obama administration, bringing a bipartisan group of technologists into the government, not just originally to rescue the very troubled healthcare.gov, which they did, but bringing tech thinking into government, reforming the procurement process, doing things like creating a sole login for all citizens into all kinds of government services. Well, there was a lot of anxiety that the Trump administration might roll that back. We reported this week that some of Trump's tech deputies met with the leadership of services like the U.S. Digital Service and the 18F department in the GSA. And then Jared Kushner, the Trump son-in-law and advisor, sent a message to Todd Park, the former CTO, and basically said, we're on the same team. This is mission critical. It's a good sign.
It's a good sign, but we still don't know about the visa policies. We still don't know about net neutrality. Can there be any sort of optimism taken from these sorts of steps about policy outside of?
No, it's certainly separate from policy. I mean, on the tech surge, right, the question is who will Trump appoint to succeed Megan Smith as CTO? Can Trump draw the same kind of bipartisan group of technologists to keep the effort going? But on the policy side, you're right. There are plenty of questions. The new FCC chair, the FTC chair or FCC chair seems to be very much against net neutrality. That's worrying to some in Silicon Valley. All these other issues where Silicon Valley politically differs from the administration, even at the same time as they look forward to things like tax holidays and a lower corporate tax rate.
Interesting you say Silicon Valley differs from Washington in some respects. We've just fascinating what's going on Twitter, which we'll dig into in a moment. But Elon Musk actually tweeting a Bloomberg reporter right here, that being Dan Ahull, and he's saying that Rex Tillerson, he seems to be backing Rex Tillerson. Here we have it saying Rex is an exceptionally competent executive, understands geopolitics and knows how to win for his team. His team is now the USA. Elon Musk really starting to get into bed with this new administration. We look at Twitter being deployed, but it's still being deployed very heavily by Donald Trump as well. Does that surprise you?
No, I mean, that has been his primary communication mechanism for so long. It was effective for him during the campaign. It's obviously sort of a mouthpiece directly to the people as he sees it. Of course, the masses aren't quite on Twitter or embracing it, but nevertheless, it allows him to get an unfiltered message out there. And with Elon's tweet, I think we're seeing him and some other business leaders take more of a role in the administration, or at least see the opportunity to come in and get their policy priorities passed in this new environment. So I think there's some cautious outreach on both sides, and Twitter, of course, is the venue of choice.
You did a brilliant podcast that I was listening to after the show the other day, and it's really talking about how social media has been adopted by Donald Trump. Will it be adopted more wide-scale, social media outlets such as Twitter, by other politicians? Are they going to take a leaf out of his book here?
I don't know. I mean, Trump is pretty singular in his ability to get attention via tweet. He's sort of he tweets impetuously, let's say. It's not really in the character of many other politicians. So I don't know. I mean, I think he's somewhat unique. We also looked at whether this is good for Twitter. And frankly, I don't know that it is. It's like there's a reason why American citizens don't want to watch C-SPAN all day, because it's insular, right? We want things digested. We're not interested in every turn of policy and who's supporting who. And increasingly, Twitter can seem like dialogue between insiders. And I think, Trump, to some extent, has fostered that.
With Elon Musk, with Peter Thiel being so close to the administration, is this something that maybe other Silicon Valley heads are taking as a positive?
I mean, well, I think everyone is sort of following script right now. You're seeing company after company make their announcements for new manufacturing centers in the U.S. and new jobs that they're creating, and it's all illusory. We'll never know if they follow through. A lot of it is politics. But clearly, I think this is going to be a pro-business administration, and business leaders see the opportunity to use that for their advantage. They're just being pragmatic. He is the president of the United States right now, and so they are rushing, just as they did 8 years ago. It may have seemed more authentic then. They're doing the same thing now, which is trying to get into the power circle.
And tweeting our own BN reporters while doing it. Dana Hull getting a direct tweet from Elon Musk, always nice. Brad Stone, always great to have you on, as ever, our Bloomberg head of global technology coverage. And for more on what Trump's tweets mean for Twitter and democracy, I urge you to catch up on the latest episode of our podcast, Decrypted. You can find new episodes on iTunes every Tuesday. And this Wednesday on Bloomberg Television, well, the Bloomberg surveillance team will bring you an interview with Spain's Minister of Economics Affairs. From Madrid, you can watch that conversation 5:30 a.m. Eastern, 10:30 a.m. in London. Still ahead, a new reality for oil rig workers as robots take over. We'll talk about how automation is changing the face of labor in the energy industry. This is Bloomberg. Now, the oil industry got a boost this Tuesday after US President Donald Trump took steps to advance construction of the Keystone XL and Dakota Access oil pipelines. They're projects that have been fiercely fought against by environmentalists. Now, Trump's administration claims the moves will create jobs and grow the economy, but could automation actually hinder the number of jobs expected? While it's known robotics are all over the manufacturing industry, well, the technology is also taking over the oil industry, particularly work on rigs. A combination of more efficient drilling machines and increased automation is reducing the need for human workers. Here to talk about this phenomena is David Wethy. Now, he covers services and drillers from Bloomberg News. He's live from Houston for us. David, great piece that you got out on the Bloomberg, and dig into it for us. We're suddenly starting to see fewer hands on deck needed.
Yeah, it's starting to look that way. And part of this is just because of lower oil prices. Oil companies were forced to kind of pull out the pencil and start to look at the costs a little bit more and figure out how can we do more with less, basically. And so what you're starting to see is a push towards automation that should start to roll out in more earnest here in the near future as better rigs are start to be built and come out to the oil field. But you're also seeing rigs that are already existing that can drill faster. They're just figuring things out better, so they're a lot more efficient in the jobs they're doing. They're not having to re-drill a well a second time. So all that means that you can do the same amount of output with fewer rigs, so you need less bodies at basically employed. So one piece of machinery that you've got right now on the rig is called the Iron Roughneck, made by National Oil Well Varco, and it helps reduce the number of roustabouts, is what they call it. Those are the kind of classic, iconic workers in the field that grab the big heavy pipe and have to clamp it together and connect sections of pipe and put it down well. You no longer need as many guys for that. You can trim it back from 3 guys to 2 guys for that particular job. So all in all, we're probably looking at something like maybe, I'm sorry?
Yeah, David, that guy that's not then needed, are they retrained? Is there some sort of positive outcome?
Yeah. What it sort of means is maybe you don't have as many guys in the field, but maybe you start to hire more guys that can watch remotely, that can look at data sheets, that can look at Excel spreadsheets, and look at more of the real-time monitoring kind of thing. So maybe you don't have as many guys in the field, but you hire more tech guys kind of in the back office.
And tech girls, hopefully. Who are at the forefront of this particular move, David?
So right now you're seeing a lot of the service companies, Halliburton, Schlumberger, those are the real big ones that are embracing the technology. Baker Hughes made it a real big point when they merged with General Electric and their oil field company. So they're really trying to pump up this big time. But then their customers, a company like BP, is really talking about how they'd like to see not just sort of piecemeal of the automation, but the whole entire system of drilling a rig become a lot more automated. And then you got the companies that own the rigs themselves, Neighbors. They're trying to roll out more rigs that could cut the number of workers at the job site from something like maybe 20 down to about 5.
That chart just says it all, the dwindling numbers that are needed to be employed within the oil rig sector. David Wethy, great story from Bloomberg News. Thank you. Finally, a case of a revolving door that reflects a much bigger trend in the tech world bleeding into automakers. Now, Ford has hired Musa Tariq from Apple, where he was the head of global social media and digital marketing. Now, Tariq will become Ford's first ever chief marketing officer. Tariq will work with Ford's marketing team to, quote, define, build and communicate the automaker's brand as it expands into connected technologies. And that does it for this edition of Bloomberg Technology. Remember, all episodes are now live streaming on Twitter. Check us out. We're at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. Do check us out to follow all previous interviews and also what the S&P 500 is doing, NASDAQ at an all-time high. That's all for now. This is Bloomberg.